oftentimes in early stage startups, nothing is working. 90% of the time, right? Nothing is working in your company, but you have to make it seem like it's working. You're kind of like selling a dream, all this kind of stuff. Lots of kind of like tactics on how you sell the dream. But the most fundamental thing is you just need to get as many conversations as possible with as many investors as possible and get them to give you a price and like bid up that price. One big mistake a lot of entrepreneurs have is oftentimes you're like, I have to talk about problem, solution, traction, team, like etc. But the best pitches, just talk about one thing. It's in 160 companies. Like I kind of have my list of like who's gonna be good, who's not gonna be good. So we're never right.
You're watching Next Big Wave, the podcast for founders by founders in Southeast Asia. In this episode, we're going to talk about founder journeys, growth strategies, and much more. Just to help me out, if you could like and subscribe, it would be awesome. And let's get into the episode.
Brian, welcome. You've never heard of Next Big Wave so far, but you're about to get an immersion into this podcasting world. Glad to have you on board. It's actually our first live session ever in terms of having a live audience. I'm super excited. And Brian, you've been an inspiration to me for a while now, so I'm super happy to have you. I've had Hsu Ken on the pod and we had a lot of fun.
Love inspiration, right? Like more inspiration.
We'll see where this goes. So, Brian, can you sort of tell us about yourself? Because I know everyone on the podcast knows about Iterative, and I've been pushing it as hard as I can, but there are still people who are learning about it. You're one of the GPs of Iterative. You've had an extensive founder background, but can you walk us through your journey a little bit?
Sure. Let's see. Maybe I'll start off with both Hsu Ken and I are serial entrepreneurs. Started 3 companies. First company we started quite young. We were like 20, 21, something like that. It was a e-commerce shopping type company. It's kind of funny because looking back, it was we were doing data mining, which was like very, very, very early versions of like AI. And so that was the whole like thing there. 5-year journey. Maybe kind of like the most interesting thing here is we were just idiots. Like for 2 or 3 years, complete idiots. And so I kind of think about it as kind of like that was our kind of like first time where like we have to learn really quickly what's going to happen. Fast forward 5 years, eBay bought the company. So we ended up both, it was in Seattle, we ended up both moving down to San Francisco. And that's when the like San Francisco journey started. Second company, I don't know why, we're kind of like, we went so much in the first company, we have to like do this again because we don't know what else we're good at. And so second company went through YC. It was kind of like social was really big at this point. I don't know if you guys remember like solo mode, right? Like social, mobile, Tinder was hot. We ended up building kind of like Tinder for professional networking. Actually got really, really hot. And we were like filling up coffee shops everywhere with all of our meetings. That company went through YC, ended up kind of like flopping. And so we ended up exiting, returned money to investors and kind of moved on. Third company, I was like, Hsu Ken, let's do it again. He was like, no. I'm gonna move to Singapore. I was like, what the fuck? And so for kind of like a pretty long period, Hsu Ken and I were separated, right? We did our own thing, which in hindsight, I thought now is kind of like quite good because you kind of like get different experiences. I ended up starting another company in San Francisco, 3 homes, prop tech company, now a unicorn backed by Andreessen, GIC, and Tiger. Lots and lots of stories to tell kind of like on that one. And then around COVID, Hsu Ken and I basically got back together and we're like, hey, we've had this like 15-year journey of kind of like creating companies, being founders. What do we want to do with our lives? Had that conversation. I think it was a sushi place. I don't remember. Debated a little bit, and I was like, hey, I kind of really want to invest. And Hsu Ken was like, I don't want to do that at all. It's like, I just want to help founders all day. And so we kind of like had this little epiphany or kind of like compromise. We're like, maybe we should run an accelerator. And so I can get to it if you guys want, but kind of like did a bunch of testing, tried to pull some money, figured out. We always thought about it as like a startup again. And so tested a bunch of stuff, learned a bunch of stuff. Now we're here 4 years later. Very, very happy to have funded 300 founders, 160 companies or so, 2 funds, which are doing quite well. We're starting to raise our 3rd fund.
Yeah, good stuff. One thing you omitted to mention, I don't know if it's intentional, I learned from this group over our retreat here that you have an interesting background before starting these companies. For example, you graduated college very, very early. So the reason I'm getting into that, and you can talk about it or not, but it seems like you've always had this drive to conquer stuff. So can you walk us through that?
Okay, no, I have like no clue where that comes from, but I'll watch you say something. When I was in the US, right, in middle school, you're kind of like 12, 13, 14. They basically go to middle schools and they pick up people who are completely antisocial, don't know how to talk to people, could do amazing math, right? And they're like, would you like to go to high school? And they go to people and they're very specific. They're like, do you want to go to prom? Do you care about having girlfriend? All my answers were amazing. I was like, nope, don't want to go to prom, don't care about girlfriends. They're like, what is your goal in life? I'm like, graduate as quickly as possible. And so got picked right into this kind of like a program where you skip high school, you go directly into college. And in college, it's this group of kind of like 25 to 30 people who kind of like all are super nerdy, saying the same thing. And then you're just kind of like going to college. Honestly, I don't know where the drive comes from. If I look back, I have this one point in life where I was kind of like, went into college, I was like, hey, what should I do with my life? And I came up with this thing where it's kind of like, okay, I want to make the most impact possible on the world. And I had this realization I couldn't do it by myself. And so at that point, I was like, okay, my goal in life is to make a big impact, can't do it by myself. How do I then kind of like get there? For whatever reason, startups was like the thing. It was kind of like the perfect petri dish, maybe, for kind of like experimentation, working with lots of people on a goal that was kind of like hopefully very mission oriented and very kind of like for the good of the world. So I was like, okay, that's what I'm gonna do. How do I now get there? So
how'd you get into startups other than the mission that you thought matched it?
I actually, I was like, I don't remember. I think I met Hsu Ken's brother first. And then I was kind of like, okay, let's start a startup, do all this kind of stuff. And very, very quickly, we realized we had no clue what to do. Like, absolutely no clue. We didn't know how to think about it, how to build. So we were just like engineers, right? And even though we were engineers, we didn't know how to build anything because we were just like idiots. And so we were kind of like, okay, we have to figure out how to kind of like get good models for this. So I ended up joining Zillow, which is Rich Barton's company. He was the one that founded Expedia. And I was like, and at that point they were very, very stealth. Didn't even know what the company was. I went to interview, they didn't tell me anything. It was just kind of like chit chat. And I was like, no matter what, I have to work for this guy. Because that's the thing that's gonna allow me to like learn the most. And it ended up being a massive company, right? And so I kind of like, that was super awesome. I was very lucky, but kind of like took that journey and then kind of like did my own startup after.
Made sense. I'm curious, and I want to talk about your co-founder, Hsu Ken, and that whole journey because it's super important to me. But it seems like you've kind of revolved around real estate a lot throughout your career. So is that something that was passionate to you or just random?
Yeah, random.
Yeah.
Really random. Yeah.
If you're watching this and you're a B2B startup founder in Southeast Asia, struggling to grow your startup, we have a whole community of founders just like you. And on a weekly basis, we discuss strategies and growth hacks. We'd love to have you amongst us. Feel free to join at nextbigwave.co or find the link in the description. I'll see you there.
And maybe to help people out here. So first company was Zillow. I had no clue it was a real estate thing, like absolutely zero. And what was really interesting was I was just like, I'm going to be here. I'm going to learn as much as possible. And when you're building products, you have to really understand the customer. And I felt like nobody at the company really did. Nobody had a real estate license. Nobody was like, so I was like, I'm just going to do it. And so all of a sudden within kind of like this 3 or 4 year period, I just got really good, right? I kind of like, what do the customers want? Why are they searching? What the agents want? All this kind of like stuff. And that's the only way to kind of build products. Now kind of like second company, not real estate. Third company, not real estate. Fourth company was the one, first company, not real estate. Second company, not real estate. Third company was the one where I was kind of like, okay, I've done 2 companies. Neither of them were like massive successes, right? And so what do I really need to build $1 billion outcome? And that was the first company where I actually spent a long time. It was a 8-month period, 9-month period of kind of like, what are the attributes of a company that is going to be really big, market size, right, all this kind of stuff. And one of the major things that I think I needed, I don't know if that's what other founders need, is I needed to be the expert on whatever this is. And when I look back, I was like, I'm an expert in nothing other than I think all the skills that I gained from kind of like doing those things. And so that was kind of like why that came back.
That's it. So, you've been co-founders on 3 businesses now with Hsu Ken. A lot of the people I speak to have issue with co-founders. You know about co-founder breakup being one of the leading reasons for startups to fail. Was it just pure luck that you guys made it this far, or was there something, a recipe for success, something when you met each other that made sense?
Did Hsu Ken talk about this already?
You did.
I don't know what Hsu Ken talked about, but I will give you some of the tea. Okay, I think I got really lucky working with Hsu Ken, right? Because we kind of like both really liked startups, really wanted to learn, really wanted to kind of like build, and just cared about kind of like quick iterations. The values really align. I don't think that's the thing that made us really good co-founders. I think the thing that made us really good co-founders, I feel like it's the same thing in marriage where we just got into more fights than anyone else. So there were periods of time when we like literally hated each other, did not talk for months, wanted to quit, threatened to quit, was gonna be competitors, like all this stuff happened. But I think in every single situation, someone would come back and clear the air. And I think when you do that over and over and over and over again, you end up really understanding each other, right? And really, I don't know, what is the right thing? Where we're here. It's kind of like you have a shared understanding of how each other operate, and you have kind of like a very good ability to. Okay, maybe I'll say this thing in marriage. The most successful marriages, I think, are the ones where you let the other person be who they are. And I feel like if you understand that deeply enough, even in business, you'll figure out ways to kind of like complement each other and not kind of like, I don't know, kill each other. So I think that's kind of like good co-founders because we were extremely bad co-founders. And we kind of like figured it out.
You just, resolved it. We talked about ego with Hsu Ken, and I think that was a really sort of good insight that he brought to the table, that ego or like very low egos are important in a relationship, right? In a co-founder relationship. You always see these Silicon Valley CEOs and founders who have a massive ego and are massively successful.
Anyway.
Yeah, for example, I mean, it seems contradictory that, having lower egos is good for building a relationship and having like a sustainable co-founder relationship. But having a big ego is good for going after massive markets, massive valuation. So any take on that?
Maybe I'll start off with like, a lot of the best people are the hardest to work with. And I don't think it's an ego thing a lot of times. It's actually a lot of people who are extremely strongly opinionated. And if you're strongly opinionated and you're right, you see those as great outcomes. If you're strongly opinionated and wrong, they're just like assholes, right? And so I think a lot of the great founders just have very strong opinions. And if you're in the way, get out of the way, right? Or like, I don't know, figure out how to kind of like align. If down, then kind of like, it's not gonna work out. I do think there are kind of like strong opinions plus people who have super high egos. My take on it is that often happens if they don't hit failures very quickly. And there are examples of this, right, where it's kind of like they do a first company, it's massively successful, second company, massively successful, but that's like super rare. It ends up being the people that a lot of people talk about, but it's very rare. And so I would say kind of like 99% of the time, you'll run into people who are extremely strongly opinionated, but not high ego, and those are the people that end up kind of like succeeding the most.
Succeeding in the shadows can.
Yeah,
cool. So, I've seen your sort of talk earlier, and I know your track record. Your superpower is fundraising, quite frankly. And one thing that a lot of founders struggle with is figuring out how to do it right. You go through an accelerator, you learn the tricks, but you can't sustain like really good track records with just a few tips and tricks. So maybe you have some secrets you might want to share.
Uh, there are many secrets to fundraising. We will teach you all of them if you apply. But maybe I'll do kind of like a very high level, just kind of like one or two things, and then I think there's actually kind of like fundamental thing that people don't understand. So at the very highest level, you want to create an auction. That's the biggest reason why kind of like fundraisers are successful. Oftentimes in early stage startups, nothing is working. 90% of the time, right? Nothing is working in your company, but you have to make it seem like it's working. You're kind of like selling a dream, all this kind of stuff. Lots of kind of like tactics on how you sell the dream. But the most fundamental thing is you just need to get as many conversations as possible with as many investors as possible and get them to give you a price and like bid up that price. And I think a lot of entrepreneurs don't understand how to do that. We kind of like teach you about like kind of stuff. And so that's kind of like the most fundamental thing. Second thing is kind of like building the narrative. Maybe kind of like one big mistake a lot of entrepreneurs have is oftentimes you're like, I have to talk about problem, solution, traction, team, like etc. But the best pitches, just talk about one thing. There's like one very specific thing about your company that makes it incredibly useful, and you're talking about all those things in the context of that one college dropping. I can talk about this all day long, so I'm not going to go deep into it. The thing that I think most people miss about how to get really good at fundraising is actually a lot of times people don't see the failures. And so I was talking to kind of like people here at the retreat. I've been fundraising for 20 years, right? Like every 18 months. And the thing that people don't see is of the times that like my fundraising sprints are successful, there's been one or two other times that they have not been successful. And so I think consistently running into kind of like, I failed. Why did I fail? What do I want to try next time? And then kind of like next time figuring that out, etc. over like a very, very long term time is the secret to get really good at fundraising.
So yeah, I think like one of the secrets that I've identified is also building a network of people, decision power making people, people that matter at the funds. Because a lot of the founders go through analysts and then they get stuck and there's like frustrations and all that stuff. We've talked about your network a little bit, and I've heard you dropping names here and there. You've obviously got a massive network, whether it's founders or investors, and you've built that over time. And as an introvert, how did you manage to build that network? Because it doesn't come naturally to a lot of introverts.
Yeah. I mean, honestly, I think the answer is I just had to. Like, your company needs $5. You need to raise money. I was this nerdy engineer that was super introverted. And I was like, I have to save my company. And so like very rapidly, you kind of like learn all these things. On the kind of like big network thing, when I was in SF, I had a rule where I was kind of like, I have to meet like one or two people a day. So I kind of like made goals for myself. I really hated it, all this kind of stuff. I ended up meeting a lot of people. And in SF, it's kind of like a really cool culture where it's like you meet some person, they're like, hey, you should meet this other person. But so very rapidly you're meeting. I mean, honestly, when we were in SF, we were meeting all these like nobodies. We were all nobodies and we were all just meeting nobodies. And now a bunch of them are super successful, right? It wasn't kind of like, oh, we ran up to them, they were successful and we liked it or whatever. There wasn't like this plague. It was just like, everyone was nobodies. Some of them turned out pretty good. And so that's kind of like how the network.
It's like a long-term thing, plan some.
Yeah, I think it's a long-term thing. And honestly, like I feel like just because of my role, right? Hsu Ken's even more introverted, right? It's like you have to go kind of like go and do this. And so it's just a big forcing function for me. Need to get good. Yeah.
You talk about San Francisco as this completely different paradigm from Southeast Asia from a certain standpoint. And most founders that, get an education in startups and fundraising for that matter, they learn how it works in North America, and that doesn't always translate well to Southeast Asia. So what are some differences that you've noticed, and how do you kind of overcome them?
Yeah. I think maybe the biggest difference is people in San Francisco, here's how I'd actually claim Southeast Asia. Southeast Asia maybe was San Francisco 30 or 40 years ago. And what I mean by that is 30 and 40 years ago in San Francisco, there were also, like what started to happen was you had a bunch of exited founders who now had money, who now gave back to the ecosystem. So VCs used to be bankers. Now they're kind of like operators, right? And then you had kind of like founders who kind of had somebody who were like, oh, I'm gonna help other people. And so all of a sudden this like ecosystem started. Before that, that was also the case in San Francisco, right? Where it's kind of like bankers, consultants would give you money. Southeast Asia now is that, right? We're kind of like going through a wave of, there are not that many. There's maybe kind of like, I want to say like 25 operators maybe, right? That are giving back to the community. And so it's just kind of like really, really small. And so what does that mean? That means the people who oftentimes are fundraising here in Southeast Asia are coming, are pitching people who haven't done a startup before. And when you haven't done a startup before, startups are this like really crazy thing, right? Where in order to be a good investor, you also have to imagine the future. You can't just kind of like look at what exists now and be like, is it good? Because 99% of the time, it's not good. And so because I feel like investors here don't have that skill set, it's not that they're more risk adverse or kind of like don't take as much risk. It's like they can't project out what this could look like. And so it feels really risky. And so I think that's the biggest difference. Fundraising here and there is oftentimes you're going to investors and they can't like project. And so you have to do the projections for them. And founders kind of don't have that skill. Investors kind of don't have that skill. And so what you get, you kind of like don't get rounds that materialize.
And so how do you see that change? I mean, it's evolved already from when I was raising for TendoPay. So I can see there's a trend for the better. But are you seeing that changing towards a San Francisco-like fundraising culture? Or is it always going to be Asia first, meaning, more conservative investment strategies? And also founders who are fundraising have a different approach to fundraising. They're more reserved, maybe less ego. They respect hierarchy a lot more. So those conversations are a lot more difficult. You mentioned earlier during our workshop that you presented to partners and, made jokes, kind of made fun of their cultures, things like that. And that put you at an even level with them and allowed you to either get a hard no or a hard yes. But that sounds a lot more difficult in Asia from an investor standpoint and a founder standpoint. So what are your thoughts on that?
Great question. Let me answer the first question first, which is it changing? It is 100% changing, right? Like you're seeing more and more exits, people are coming back. We're building community, other people are building community. And so I feel like what's interesting is like every single year or every single cohort, we get 20%-ish more applications, right? So kind of like more founders are coming in. And then I want to say like Hsu Ken and I probably meet one or two ex-founders every week who are all like, how do I be involved, right? And so kind of like we get this like catalyst of things that are happening. So it's 100% changing. What I think is important though is it's going to change really slowly, right? Like startups are already slow, exits are slow, etc. Right? Like we see a lot of kind of like people coming back to Singapore, Indonesia, all that kind of stuff. So it's like increasing a little bit, but this isn't kind of like next year it's going to change, right? This is like 5-year time period, maybe like 7-year time period where kind of like everyone needs to put energy into the ecosystem for it to kind of like get better. On your second question, kind of like when can you start making fun of investors and like joking around? I think really comes down to like when are investors going to be founders, right? Like, I mean, everyone here, we're having a live show. Here's all our founders, right? Like everyone sitting here, when they come up to Brian, they're like, Brian is a founder. I can tell him all my struggles. I can tell him like all the shit that happens because Brian went through it. And I feel like when that happens with investors here, you're going to see that change where you're kind of like, everyone's been through this. And so we're all just trying to kind of like get better. So hopefully that's happened soon.
Yeah, we need a few exits, right? So, I mean, the Lazada Mafia is starting to have that type of influence, but
yes,
it's only a few, right?
Yeah.
But this is a good segue to talk about the transition between being a founder and an investor. You obviously still consider yourself a founder. You just said it. But could you walk us through kind of the differences of how you operate on a day-to-day basis now versus before?
Yep. Let's see. I feel like a lot of stuff I'm working on is still kind of like founder stuff, right? Like we have a marketing team, we have a growth team, we have an investments team, we have to do OKRs, we have to do like performance reviews, I have to take the hiring. So all the stuff is kind of like founder level stuff. And I feel like it's very different for us, right? Because I don't think a lot of firms are kind of like doing all the stuff. They're just kind of like, hey, let me look at a bunch of deals. I would make 2 deals every single year, et cetera. So I think just like structurally, we're very different. Maybe there's kind of like, I want to say there's maybe like 2 big changes to flipping to a investor. The first big change is we had to figure out investing has very, very slow feedback cycles. And so we have to figure out how to create those feedback cycles. Meaning we've now invested in 160 companies. Like I kind of have my list of like who's going to be good, who's not going to be good. So you can say is we're never right. Like of all of our rankings, the companies that end up being the best ones, we can't guess what they are. What is it? And it's very different than startups, right? Like in startup, you launch something, in the next day, you're kind of like, yeah, nobody cares. It's bad. You work on it a little bit, you try maybe 5 other things, you're kind of like, yep, nope, yep, that's it. Like we should kill that. And so in venture, that doesn't happen, which means we have to build in a lot of cracked metrics, like how much the founder spike us after the cohort, how many end up fundraising, when they fundraise, how is the valuation, all this kind of stuff, to like give ourselves some sense of whether we're making good investments or not. But that's kind of like one of the biggest changes. And I would say maybe the second biggest change is it's been really interesting fundraising as a fund. Because as a founder, you're kind of like, here's a bunch of data, here's my product, here's kind of like where the world is headed, give me money. In LP fundraising, it's much more relational. And I think the reason why is because a lot of LPs, these are kind of like institutions, right, give you a lot of money, all that kind of stuff, just spend at max, maybe like 1 week thinking about giving money to VCs. And so it's a lot of kind of like, they're not super deep in it. You have to build a relationship over time. You have to figure out kind of like your storyline, all that kind of stuff. And then during that 1 week, that really matters to kind of like fundraise. And so fundraising has been kind of like very different. I didn't realize that.
Is it still, because you mentioned during your workshop, I keep referring to it, but it was really interesting. You kind of, as a startup founder, you kind of have to have a timeline for your fundraising. You mentioned 6 weeks. There's a hard cap on and investors have to rush to bid on that.
Yeah.
With raising a fund, I assume it maybe stretches out a lot longer. It's investing on a rolling basis, or you have a hard cap, you got to close the fund before you go to deploy.
Yeah, so the thing that's really weird about fundraising, and I feel like none of this is used with founders, but so I'll make it quick, right? Like in founders, you're kind of like, I need to raise $2 billion. Someone's probably going to write you like a $1 million check and then you fill it, right? There's kind of like a start, a stop, and you're either successful or you're not successful. This is how good founders fundraise. Bad founders kind of like fundraise all over the place. It's rolling, all that kind of stuff. In funds, you're raising $100 million. You're raising $200 million. No one's writing that big of a check, right? And so the biggest check someone's writing is maybe 5, maybe 10. And so you now need to go have 10 people give you $10 billion. That would be like a great fundraise, right? And it works very kind of like serially, which to me kind of like sucks, right? So then you don't have this kind of like auction, this little mechanism. Yeah. You don't have this auction mechanism. And so what are you leaning on? You're leaning on kind of like consistently showing that you execute well, you have a good relationship, people like you and all that kind of stuff. So it's way more kind of like relational driven, that not. Oftentimes if you go talk to GPs, they've met the institution like 2 or 3 years. They met the institution at fund 1 when they come in on fund 3. And so you can see how it's kind of like very, very long, I want to say sales cycles, but yeah, sales cycles. Sure. Yeah.
So back to founders, like, yeah, this is more my curiosity. So you mentioned that you and Hsu Ken sort of have your top picks and they did pan out. Has this evolved over time? Because, you're learning to be a DAO, so this is kind of brand new to you guys. So obviously your hit rate might have been low at first in terms of within your cohorts, picking the right horses and all. As you've learned from these experiences, are you learning to pick differently and you see that as refining your success rate?
Yeah, So Zeke and I are really, really kind of like strict about this. We run retros all the time. Melissa's not either. So like, yep. I've written some of these. So we run retros for recruiting, for in the investment retro. What we do is we kind of like look at all the outcomes of the company, or it's not even outcomes. It's like, where are they now? Where do we think they were? And then when we made the investment decision, why did we invest? Was it the market? Was it the founder? What bet are we making, etc.? And we take all this, and I mean, honestly, it's like not that scientific. You just kind of look at it, and you're kind of like, we think when we invest in founders that execute really well, they turn out to be like really good companies. This is so not, we put a bunch of data in it, but I think we realized very quickly there's like no formula. The exercise is mostly turned into reflection. And so Hsu Ken has a scorecard of why he made investments, why, like what it turned out. I have a scorecard for why I made investments. And then we would sit there for like 45 minutes and we're kind of like, would we make the same decision? Should I think more about market versus founders? And so we have reflections all the time, but I don't know if there's kind of like concrete kind of like takeaways from any of these. Maybe not obvious to the audience, so maybe kind of like I'll say. The startup journey is extremely nonlinear. So you can be around for kind of like 2-3 years, right? Completely flat, nobody likes you, you're getting rejected left and right, and also something clicks, and then you get a little bump to the next stage. And then oftentimes like there's no bump and you're just like screwed, but it's like super non-linear, and so it's very hard to kind of like project out whether companies are successful or not. And the opposite happens, right? Where kind of like you're like hot shit during the batch, everyone loves you, you have the fundraising, you're the first one to do it, it closes, you're kind of like, oh, fundraising is easy. And then fast forward like 1 or 2 years, dead. Nobody cares, right? Like you can't figure out kind of like something. You thought your ICP was this, but it really was that. And so you just like can't tell. And so one thing I've reflected on looking back at all the my founder friends who are successful, there's only one trait of all these founder friends. It's that they've been at it for a very long time. And so
On the same startup or just
being the founder, right, for a very, very long time. And those tend to be the ones that count. Cool. So
Yeah. So with your learnings thus far as an investor, what would be the like perfect pitch? Meaning like you see this pitch and it's like the ideal startup you know you'd invest in and it'd be a winner.
Ugh. I don't think there'd be a perfect pitch. It's very kind of like nuanced. Maybe I could tell you some of the ones that kind of like resonate the most. I think the ones that end up resonating the most have two things. One is a very strong why now, right? Like Zeke and I are just like so nerdy about startups. We study all the startups in history, right? We're kind of like, oh, these guys are doing kind of like a financial app and all this kind of stuff. And there's been 10,000 financial apps in the previous kind of like generation of founders. We know all of that stuff, right? And so when a founder comes to me and they're saying something, I'm like, dude, we tried that like 10 years ago. Like, why is it different now? What's changed, etc.? And they can't answer that question. I'm kind of like, why would we kind of like do this? And so oftentimes the ones that kind of like fail are the ones that kind of like don't understand what kind of like, it doesn't mean that history is kind of like predicts the future, but like don't understand the previous context and are trying to sin that. It's okay to try the same thing, but like what changed about this thing? And so the best types of founders will be able to kind of like answer that and not just kind of repeat previous mistakes. The second thing that makes a pitch really strong is they have a customer insight that I've like never heard of. And we see so many kind of like founders all the time. They tell us things that are like incredibly obvious, right? Farmers need money. Like, okay, no, right? But like, what they need money? Why can't they get it now? Like, what is this kind of like interesting thing here? Is it kind of like an underwearing problem? But what is this thing that like nobody has told me before? That specifically makes this thing work. And I feel like the best pitches are the ones that answer both of those questions. There's some really interesting insight I didn't realize. I've never heard of it before. This person is so close to customers, they got it. And then this particular thing has to happen now because. So those are the best pitches.
Love it. So, you're obviously bullish on Southeast Asia. Hsu Ken converted you, and I think you're putting, a lot of effort into developing our beautiful little piece of the world. What's next for Iterative? Are you looking at other geographies, or you just want to scale massively in the region, maybe have a growth fund? What are you thinking?
Yeah. Hsu Ken and I debate this all the time. I'm like super ambitious. I'm like, let's take over the world. Hsu Ken's like, calm down. So there's definitely some kind of like geography stuff. My guess is not gonna be that quick, because I feel like we're now kind of like semi-experts at Southeast Asia community building, and so most likely the expansion paths are gonna be like double that. So what does double down mean? It might mean more money for portfolio companies, more money for other people. We might decently Series A rounds, Series B rounds, etc. So like just more programming. And then the other thing that I've thought quite a lot about is just kind of like maybe the framework for thinking about this always is like, we have 300 founders. What are they struggling with? And oftentimes they're struggling with things around growing a company. How do I become a great leader? How do I raise the kind of like Series A? How should I kind of like prepare my company to the next stage or like build an org? I think a lot about debt fundraising. Like Southeast Asia has like zero debt. And so kind of like maybe it's like that. Maybe the thing that happens more here is M&As happen more. And so how do we help people go through these kind of like smaller exits, M&As, etc. And we'll take that entire list, raise a ton of money, build a team with kind of like massively smart and autonomous people, and then kind of like go after these initiatives.
Good stuff. So, we've talked a lot about business, and you wanted to talk about fun stuff a little bit. I've heard you talk about K-dramas this whole trip. So do you want to tell us what you do for fun outside of work? And I know you're a hardworking guy, but I'm sure you kind of take a load of some time.
I don't do that much stuff for fun, honestly. Every time I feel like I have time for fun, I try to spend it with the wife. And so we play a lot of video games. It's very nerd.
What do you like?
There's not that many couples games. There's a lot of kind of like hardcore single player games. The couple games that are good end up becoming these kind of like storytelling games. And so the best game we're playing right now is It Takes Two, which is cinematic, very emotional, all this kind of stuff. And so it's great. People should play it. Just gonna have a dog, and so we do a lot of kind of like outside walk. If we didn't have a dog, I would never be outside, right? So we go out, do all that kind of stuff.
You live in SF, right?
Yeah, that's coolest for dogs. And the third thing is I'm getting my pilot's license. I heard, but very, very excited about that. I thought I was gonna take it, like every founder, I thought it was gonna take me 3 months. It's been about 2 years.
So this is your like the first pilot license, or you're taking it as course? Okay.
Yeah. First pilot license for me to take Jessica and the dog out to random islands.
Yeah, or Redwood National Park. Yeah. It's classic SF founder who's made it. Takes a plane, goes every day for the week. So I love it. Good stuff, Brian. Love you speaking with you, and thank you so much for being on the podcast.
Thanks, that's it.